Hello traders, welcome to today's Pairs of the Day update. Let's dive into the latest movements and key factors influencing US dollar, Canadian dollar, and Japanese yen. Investors are zeroing in on the Core Personal Consumption Expenditure (PCE) Price Index for May, set to release on Friday. This crucial data will provide fresh cues on the Federal Reserve's interest rate decisions. If inflation figures come in soft, it could bolster expectations for early rate cuts. Conversely, hotter than expected numbers might dampen those hopes, signaling a more cautious approach from the Fed. Despite a surprising 0.1% rise in U.S. durable goods orders for May, the U.S. dollar has come under pressure during the American session. Economists had projected a decline, making this uptick noteworthy. However, the market's focus remains on upcoming inflation data and its potential impact on the Federal Reserve's monetary policy. The Japanese yen is on a near 10-day losing streak, raising concerns about potential intervention from the Ministry of Finance. Traders are closely watching for any signs of action as the yen continues to weaken. This prolonged dip has significant implications for the Forex market, particularly if intervention becomes a reality. Uncertainty surrounds the Bank of Japan's next moves regarding its debt-buying program. The BOJ has yet to clarify when and how it might scale back these measures. This lack of clarity adds to the volatility of the yen, leaving traders and investors in a state of anticipation. The US dollar to Canadian dollar pair has dropped below the critical 1.3700 resistance level, influenced by a correction in the US dollar and anticipation of the US Core PCE data. Traders are closely monitoring these developments, as they could significantly impact the direction of the loonie in the coming sessions. The next significant move for the Canadian dollar hinges on the April GDP report, expected to show a 0.3% growth after a stagnant performance in March. This data will be crucial in forecasting the Canadian dollar's trajectory, offering insights into the health of the Canadian economy and its potential impact on currency markets. Now, it's essential to see what technical analysis reveals. Let's take a look at the chart. We have opened the 4-hour chart of US dollar to Canadian dollar. The stochastic indicator is moving higher, targeting the overbought area, suggesting a potential upward movement. The price is currently moving above the 20-period moving average. For support and resistance, we've identified 1.3675 and 1.3642 as support levels, and 1.3747 and 1.3783 as resistance levels. If the price moves higher today, we expect it to reach the resistance area at 1.3747 or even higher to the next resistance level, providing a potential profit of 30 to 70 pips. Conversely, a downside move may bring the price to the support level, resulting in a bearish movement. We have opened the 4-hour chart of Canadian dollar to Japanese yen. The stochastic indicator is trying to cross lower near the overbought area, suggesting a potential slight downward movement before going back higher. Meanwhile, the price is currently consolidating above the 20-period moving average. For Canadian dollar to Japanese yen support and resistance, we've identified 116.86 and 116.06 as support levels, and 117.81 and 118.45 as resistance levels. If the price moves lower, it could reach the support level at 116.86 or lower, offering a potential profit of 50 to 100 pips. Conversely, an upward move towards the resistance level at 117.81 could result in a bullish movement, potentially reaching an all-time high if the price goes higher. Remember to always be aware of your risk management before you enter any positions. Okay, that's all for today. See you in the next video.